Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Tuesday, July the 7th. Well, a change of trend in the first time frame today. We had a higher high and a higher low today, which means that the market is trending up in that first time frame. Previously we had a downtrend. The downtrend was established here when we had a lower high and lower low, and the sell-off, a very strong sell-off from this very large zone of resistance that we previously identified, continued with a lower high and lower low here. But we had the upside price rejection here, which was fairly strong. So it's a little wonder that the market is now trending up in the first time frame with a higher high and a higher low. Now looking at the candle, though, the candle is bearish. We have a red candle, and the size of the body has increased. So it means that the bears have made a fairly solid net gain for the day. And we've also traded down to close the market near the low, not quite at the low, but near the low. And that means that the bears have some sort of moderate control of the market, and they're showing some commitment. Unfortunately, though, they weren't committed enough to push the market down below the previous low. So that really negates a lot of the bearishness that we're seeing with this candle. Now, the market actually tried to rally up here, and then sold off, which means that tells us something about the power of the bulls for the day. And the bulls failed to take control of the market. They actually tried to take control while the market was trading up here above this previous high from 2 days ago. The bulls were in control. They were showing some sort of commitment, but they lost that commitment. So it doesn't bode well for the uptrend continuing. Now, if we look at where the market traded to, it was within this zone, fairly close to this zone that we've identified. So we've got a very, very strong area of downside price rejection here, the area of resistance here. Now, looking at our Ichimoku indicators, we're still trading up above the cloud or the Kumo, which means that the market still has a positive bias to it. But looking overall, we had this very strong uptrend and now a very, very large area of congestion, fairly volatile if we look at the moves within this very large area. So a lot of selling pressure as the market has tried to rally up into this zone of resistance. Now, looking at our other indicators, the Tenkan-sen and the Kijun-sen, they're both pointing sideways, and the Kijun-sen, which represents a longer time frame trend, it's been pointing sideways for quite some time, and that's representing this congestion area that the market is in at the moment. And now the Tenkan-sen is pointing sideways as well. Now, we know that both of these lines can act as an area of support or resistance, and we've seen here that the Tenkan-sen acted as resistance and the market sold off, and here again both of the lines, the Tenkan-sen and the Kijun-sen, acted as resistance for this market, and there was a sell-off. So what do we expect to happen? Well, if the market does continue to rally, and we have to believe that the trend will continue up because the trend will stay in force until we have evidence otherwise. Not a very bullish candle to try to rally on, though, but if it does rally, then we're likely to see a sell-off as we trade up within this area again. If we do have a change of trend to the downside, we need to look at the current low, and then this swing low here becomes important, and the top of the cloud, the Kumo, which means that the market will be interacting roughly around this area here. That becomes important as an area of support. We have support here and here, so very strong areas of support to the downside, strong areas of resistance to the upside. So range trading for this market, not a market to take a long-term point of view. Intraday trading might be fine, but on a daily basis or a longer time frame, the market is range-bound with an upper boundary here and a fairly strong lower boundary, bounded by the cloud and the swing lows that we identified previously.